How are you out there? Enzo DiCostanzo, clinical professor of economics and finance, St. Peter's University, Jersey City, New Jersey. It's the weekend of May 4th, or actually Saturday, May 4th, and we're making a video for the practice final exam for the microeconomics section. It's going to be the merchandising material, and it's about 20 questions. We have a spreadsheet. We'll go over some of the answers. I'm not handing out this exam. This is the exam for Monday. Go over it, watch this video, try to figure out how to resolve all the problems, and I'm going to use Excel to do it, but you got to do a pencil and paper, and good luck on Monday. Okay. All right, again, here's the first one. So this is the exam that's coming. I'm not sending this out. I'm just going to send the video out, and that's it. I'm not sending out a spreadsheet. So, watch at your own risk. And looking at this is income from operations is gross profit less what? Well, if you look here, we have a partial of the income statement. It's gross profit less operating expenses, and that's income from operations, right, which is right there. A little bit bigger. Maybe make capitals of the key words. After gross profit is calculated, operating expenses are deducted to determine net income. So gross profit minus operating expenses is net income, okay, which is that one. A company determines cost of goods sold. Each time a sale occurs, it uses a perpetual inventory system. That's the only ones that use a cost of goods sold. And we have the picture from the textbook. Patent company purchased merchandise from another company. At the shipping point, like you buying from Amazon, the freight cost will be paid by the buyer. So if you look here, shipping point this is Amazon in Elizabeth, New Jersey, of course, right? Ownership passes to the buyer. This is UPS or FedEx or the post office. This is us in our house in Essex County, New Jersey. And Amazon puts it on the truck. We pay for the truck. We pay for what we bought. I've had that discussion in class with you guys a number of times. Okay, that's that one. Yeah, now we're going to flip to the Excel piece. This is number 70. Okay, this is number 7. It says Costers Market recorded the following events. It received goods of 20,000, returned 400. So they bought these. So if you look at number 70 here, whoops. And if you look at number 70, so yeah, you're looking at this from the perspective of somebody who was the buyer. So it's going to be actually it's right here. Okay, it's going to be inventory numbers. So you bought 20,000. So here's inventory. Here's 20,000. Here's accounts. So you owe the supplier. You're the buyer here. You owe the supplier 20,000. Actually, what we should do is maybe come to the end of this thing right there and do parentheses buyer, something like that. Okay, just to know who's doing what. Returned 400. Okay, paid some freight on the shipment, and the freight goes into your when you're the buyer, it's freight in, shipping point, which means it's a part of the cost of the merchandise, that kind of an argument. And then you pay the invoice, and the third, even though there's no number here, you're paying for the invoice in the discount period. So you're trying to figure out, as a result of all this, how does the company's inventory change? Okay, and again, that's the term that she bolded out. Now, obviously, we have the answer here, but that's not, you want to be able to go through it. So you bought 20,000, and let's read through this. It's again, there's a couple questions here that need Excel, actually more than a couple, but you can do this all pencil and paper. 20,000 inventory, so debit to an asset, liability 20,000, something that you owe somebody 20,000. You made a return, so your payable decreases, your inventory decreases, that kind of a thing. You increase inventory by paying for the freight costs to get it shipped from the supplier. And then within the discount period, so this will happen, well, it says within the, okay, so we don't have the dates. I structured the dates here where it falls within 10 days of the first. I just made that sort of work like that. A 2%. Now, the discount is the following. See, the payable is your initial purchase minus what you returned. It's not 20,000. 20,000 minus 400, so that's 19,600. The 2% is here, 2% of 19,600. That comes out of the cash, so your cash is covered 19,208, and then you just record a decrease in inventory because you measure inventory by dollar value, not by how many TVs are in there or whatever it may be. And that's how we have this balancing on our journal. So this is our time control journal, which is right there. Then you go to the ledger, which is here. I just assume no inventory because you didn't have it at the beginning, so I assume nothing. These are all the entries from up here. So here, let's do it like this. These are all of our inventory entries like that. There's 4 of them. There's 2 debits, 2 credits. When you have your discount, you took a little off. When you returned, you took a little off. When you paid for the freight charge, you put a little on in your initial purchase. After doing all the math, what's plus, what's minus, plus 20,000, plus 100, minus 400, minus 392 is 19,308. And I think that's, yeah, there's 19,308. Don't try to memorize these numbers, okay? Just try to sit down and really work through this. It's impossible for you to try to memorize all this, but just try to work through these. All right, that was 70. And actually, yeah, here, we have it here. Yeah. All right, we have it right there. So yeah, again, I'll probably send this to you sort of afterwards, but this is, you know, this is just for Monday. The final exams will be different. This is not going to be the final exam. Okay, we have all the entries here. You guys can look at them. You know, we get this back and just try to study from this maybe a little bit, that kind of a thing. 76. These are sales now. It's a $2,000 sale is made. $125 returned. What amount is received as payment? Or is, yeah, what amount do you receive? Well, your 2%. It's not 2% of 2,000. It's 2% of 1,875 is what it is. That's right, because that's in terms of the cash number. And actually looking at this, let's see if we can do the math. If the math will work. 2,000 minus 125. And this is 1 minus 2%, which is 98%. Right? I hope that's what the answer is. Okay, let's see if my calculator, if that's going to be the number. Yeah, 1,000. Yeah, that's it. Okay. So that's how to do that. You can leave it in bold or not. That's fine. Okay, but there you go. So it's, you've subtracted out the return, and then you subtracted out the discount. So that was, in terms of cash, that's what was left, and it shows it here, 1,837.50 cents. What the discount, and this itemizes it. So again, this is what the journal looks like. Looks like something like that. Okay, that was 76. 82, 2% discount is 16. Yeah, this one's a little weird. I looked through this. The answer key gives this to me as the number that you see in front of you. Actually, this needs to be yellowed out again. Yeah, but if you look at this though, it's probably the best answer to this. But 2% of 800 is 16, right? 2% of 800 is 16. That's the 2% discount. So debiting sales of 16 is true. All right, you don't credit cash for 800. That's wrong. But then you do debit cash for 784 because that's how you get 800. So this is true. And so A, B, and D are true. But the book gives B is the answer. So, you know, I don't know if there's something I missed here, but that's how that is. Credit memorandum, goods that were sold on credit or returned to customers. So look up what a credit memorandum is, and a debit in the textbook or in the Excel notes. You know, look that up, and you guys can see what that looks like. You know, goods were sold on credit and returned. There's a note that goes with it. Credit memorandum is a credit entry, but with an explanation. Again, I apologize. A couple of these weren't yellowed out like they should have been. Sales return does not provide information yeah, it does provide information for inferior merchandise. It does provide information for inefficiencies in filling orders. It does provide information for errors, but it doesn't provide cash versus credit breakdown. And we discussed that in class. This is a sale of 1,500. I don't think I worked this out in the Excel because I have it worked out here. There's credit terms of 2% within 10 days. If you took advantage of the discount, it's 98% of the 1,500, which is 1,470, and the discount is $30. The respective normal account balance of sales revenue, sales returns, allowances, and sales discounts. This is normally credit. These are normally debit. Okay, just look up in the Excel notes, and you'll see what's normally credit and debited. If you do a physical count of the inventory, and your records are 4,500, but your physical count is 4,300, that means you sold 200 more, and that's the journal entry for selling 200 more. That's what that looks like. This is 113. Yeah, so actually this is 76. Let's go back to 76. Yeah, okay, it's all here. Okay, 76 is here or here. It's a $2,000 sale. So yeah, so look at this. The normal balance for sale is credit. The normal balance for returns and allowances is debit. That's almost like the last question. So you subtract out the 125 actually from here, right? This is the 2,000 minus 125. This is 2% of that number, and this is the difference, or not the difference. This is the or the difference, or 98% of that number. So 2% is here, 98% is there, and you added it up. That was your check. Okay, but that's the seller. That's how you look at the seller situation. All right. Yeah, 82 and 88 we just talked about. This we talked about. 99. Yeah, we talked about all these. Yeah, this is what we talked about. Yeah, so we're up to 113. And this says you're given a couple pieces. You're given cost of goods sold. You're given net sales. So you have to back out a couple numbers for this. So for 113, it's here. I'll leave the Excel here. I probably should have dumped these in along with it as I went along, but I didn't do that. Oh, so you're given cost of goods sold 270. You're given that. Sales returns 20, and net sales 4. So you're given those 3 blue ones. And from that, you want to figure out revenue. You want to figure out gross profit. You want to figure out all those pieces. So looking at this, there's discounts of 0, so that's added up. And if you have 470, actually you need 470 because you don't have it. But you're given the 450. Yeah, you're given 450 as net sales, so it's got to be 20,000 more, right? So this is just this, right? Those two added, right? That gives you the 470 minus 20 is 450. Cost of goods sold is this. This is 180. And then there's no other operating expense. So they're asking for gross profit and for sales. So there's the 180 and there's the 470. So you have to just back out the math a bit. And again, I'll probably send this to you guys at the end. But if you miss Monday, there's no makeup for the practice. It's just going to be 0. So, miss it at your own risk. I don't know what I can tell you, but you got to be able to deliver. You have to, and I think a lot of you guys know I got rehired by my old firm. And already I could see there's people who just, people who worked in big firms, now they're working for a little firm. And in a large firm, there's always a backup. There's always someone else to sort of do your work for you or pick up the pieces or get something done that you couldn't get done. But when it's a few people, it glares when you can't do something, and that's a problem. And we're seeing it again, immediately practically. But what are you going to do? Anyway, I'm online now, so I have to be careful. Like, start criticizing people. So anyway, but 124 net sales is 700,000. Cost of goods sold is 490. So the gross profit is 210,000 divided by the net sales. So it's 30%. Okay, you see the math in front of you. This is again a bunch of financial information. Yeah, it's right here. So let's move this over a bit. You're given 45,000 operating expenses. You're given 9,000 in sales allowances and returns. You're given 6,000 discounts. Okay, you're given a revenue of 160. So this all that's 15 in subtractions, and then that's 145. Here's cost of goods sold is 87. Here's this is this. Here's that's 45. This is 13. Okay, so here's 40% of this divided by that is 40%. So the gross profit is 40%. We got to pay for it was 60. So for every 100 you spent, 60, you have 40 left. These two added up should equal 100, okay, which they do. This is this of that number. So this is already included in that 50. That's why it's not. That's why these 3 don't add up to be 100. Okay, that's why. Okay, because it's already part of the 40. But 60 to 40 add up to now it's pieces of this thing is what it is. This is 31 and 9 is 40%, right? These two add up is 40%. This is 60, and right here's the operating expense. And here's this, and that's the 90, and what's left is the 9. So here's 9 plus 9. So it's this one, and this one to add up to the 100. So you want to make sure how to account. 145,000 came in. Where'd all the money go? There's 13,000 left after operating expenses and cost of goods sold. Okay, so that's again the question was gross profit. What was gross profit? Okay, so we asked about that one. This was gross profit percentage. Cost of goods sold. what was that? That was 124. 138 was 58,000. Again, doing the appropriate math to get to the gross profit from all the numbers that you were given. Yeah, that's that one. This one, there's two for 141. This is, yeah, this is, you made $40,000 cash revenue. There was $1,000 in returns, so it's 39,000. They're asking you for cost of goods sold and net sales revenue. They're asking you for those two. Okay. So you got to go through. The net sales is 39, so then it narrows down to just A or B, and then from there you got to figure cost of goods sold. Where you're given, what were you given? Oh, the rate. Yeah, you're given the profit rate. So what you do with this is, and the math is up here. So yeah, you were given this right there. So this is 40. This number is 40% of that number. Okay, so it's 1 minus. Yeah. So what's left is, yeah, this is gross profit is 40%. This is 60 of the 30, because if this number is 40%, this has got to be the 60%. So this is 1 minus the 40 times that number, and it's negative because cost of goods sold. So that's 60% of net sales, because if 40, if gross profit is 40, cost of goods sold has got to be 60. Okay, and we checked it, made sure. Okay, and 40 and 60 is 100%. Right, so wasn't a cost of goods sold, it's gross profit. Okay, so from 141, it's, yeah, and that's 20,400, and that's A. But again, you got to be able to do the math. Okay, it's all in Excel. Yeah, here's 1, 2, yeah, 2 periodic systems. I think that's it. Okay, so this was 141. This was 146. It was here. And yeah, this is, now you're in the periodic system, okay, because it's purchases, and that's the big giveaway. You're in the periodic system. You were given initial inventory 23,500, purchase 2,000 or 201,000. A couple of deductions here, discounts and returns and allowances. The deductions end up at 12,000. This is purchases minus your deduction, so your net purchase is 189. And then you had the freight, and all the goods purchased were the 189.78, and the goods available for sale was what you started with, plus net purchase plus freight in was 2,000 or 220,300. And but the question asked for this one. That was it. So you have to worry about all this other stuff. But your ending inventory, the cost of goods sold. Cost of goods sold is the goods available for sale minus what you're left with. That's cost of goods sold. But again, go back to the textbook and go back to the Excel sheet. It has this whole thing here. Okay, it has all explained. Okay, and then 156 is again 30,000 starting inventory, 130,000 purchases. Subtract the discounts of returns and allowances. This is net purchase, which is right there. Here's 10,000. Here's 136, right, which is all that. All right, we have initial inventory, this piece right there. Okay, so this is cost of goods purchased, inventory. There's your ending inventory, and your cost of goods sold is the difference between those, right? But again, go back to the textbook. So again, goods available for sale, and this is goods purchased. So they're slightly different questions. Okay, so you got to know which ones that you're being asked of. But like I said, search through the Excel file. It's in there, folks. You got to be able to do research. You got to be able to do it. Okay, I think this was less than an hour. Okay, so I'm going to post this, and I'm going to send it to all the 2 micro classes, and now I'm going to do the macro one. Okay, so we have I have another video to make very quickly tonight to give you guys all day Sunday to sort of work with this. But folks, please spend some time. The exams for all my sections are the week of the 13th. I have an exam on the 9th, which is not not you guys. It's not the micro sections, but I'm going to have them come on the 13th and the 15th just to give them a little bit more time. But okay, but folks, study. I'm not going to send out an Excel. Watch the video and go through your questions packet. Okay, go through your questions packet. I'll just slowly sort of go through these a bit. Okay, so you can look at some of the answers. Okay, and you guys can work on this because you have the questions. You have the electronic version of the questions. And we'll focus over here on the left-hand side. Okay, folks, good luck. Study, study, study.